Welcome to this week's market drama. We'll begin with the S&P 500, which was up 2.7% for the week. It is up now 6.9% year to date. NASDAQ was up more, 4.2% for the week. It is now up 6.1% year to date. So what drove the markets to bounce back from the last couple of weeks of negative market performance? Well, it wasn't economic data, right? We had first quarter GDP numbers that disappointed. I'll cover that in a minute, as well as PCE inflation data that didn't really show any signs of encouragement for the markets. What drove market performance was earnings. And as I mentioned the last couple of weeks, earnings is ultimately what drives the stock market. So about 1/3 of the S&P 500 companies reported so far. And more specifically, we had Tesla, Alphabet, Microsoft, which have been leaders of the market rally over the last couple of years, all perform well when it comes to earnings. It's specifically Alphabet, which exceeded estimates and announced a dividend for the first time. So if these companies continue to deliver, I think that the market could overlook the fact that, for instance, we had PCE data, right? Personal consumption expenditure price index, which is the index of inflation that the Federal Reserve likes to look at carefully, considering it has a broad look at inflationary pressures within the economy. In March, we saw PCE up 2.7 from a year ago, up from the February 2.5% rate. Core PCE, which gets rid of some of the more volatile parts of the index, was up 2.8% during the month. This was slightly higher than expected, yet the market continued to rally, right? Why? Because of earnings. Now, the other one is we saw first quarter GDP numbers, the advanced estimate for the quarter. It was much lower than expected at 1.6% from a 3.4 annualized pace, which missed consensus estimates. But once you double click, you see that the biggest headwind was actually foreign trade and inventories, which tend to be the most volatile parts of GDP. When you look at consumption, for instance, it's held steady, right? And as the consumer goes, so does the economy. So I wouldn't read too much into that first quarter GDP number. So what do we have in store this coming week? We have continuation of earnings, but when it comes to economic data, we have non-farm payrolls report on Friday, and we also have the FOMC meeting on Wednesday. Now, keep in mind, we're not expecting the Fed to make any decisions of lowering interest rates in this meeting, but as always, the press release as well as the Q&A session afterwards will be telling about how the Fed is looking at interest rates in the outer months. That is it for this week. Stay tuned for next week.